It's 5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know. More letters. President Trump warns the EU and Mexico they'll face a 30% tariff. The EU plans to step up trade deals with other nations. Laying the groundwork, a White House probe over Fed renovations fuels speculation that Trump may attempt to fire Chair Powell. And the view from corporate America, Wall Street braces for the weakest earnings season in 2 years. So did I miss anything in the week that I was out? Gained by new highs in the market, both in the S&P and the DAX. Maybe I didn't really, but you had 30 hours from the Trump headlines, from the letters coming to the EU and Mexico that there'd be more tariffs to try to decide and sit there. What would the market reaction be? Maybe this is anticlimactic in light of that. Yes, we are down across the board, but not dramatically so, down about a third for both the S&P and NASDAQ. Now, for this bond market, the pressure does continue there. Bonds have been under pressure, be it from the better economic data or from these renewed threats as concentration on the renovations to the Eccles building. Is that cause for trying to oust Powell? 2-year yields, those are a little change. Your 10-year yield up by 1 basis point, but you can see on the bottom of your screen, it's Japanese bonds that are really under pressure this morning. A story familiar around the globe that it is concerns of fiscal, of deficits, of spending that has Japanese 20-year yields at their highest since 2000. Those are your overall markets. Let's get you some stocks to watch. With that is Valerie Teitel. Hey, Val.
Good morning, Danny. Let's start in the tech space. We've had Synopsys rising nearly 4%. This is on the back of the Chinese regulator giving them the green light for their $35 billion acquisition of Synopsys. These two companies are very active, very massive when it comes to the computer software simulation industry. Next, let's move on to defense. Boeing was upgraded by Bernstein on the street. And there's also some more speculation about this major announcement that Trump is due to make today around Russia. Does that include more defense support for Ukraine? So defense stocks are in the green this morning. Lastly, let's end in the consumer space. Kraft Heinz up 2.5%, adding to Friday's gains. This is on the back of a Wall Street Journal report that the company is looking at a breakup of its business lines. Danny.
Valerie, thank you very much for that, and we'll catch up with you later in the hour. Also in this hour, in just moments, we'll be speaking with Isabelle Mateos Lago of BNP Paribas, who joins us on her read on the current impact of trade uncertainty, and Sarah Bianchi of Evercore ISI joins us for analysis of the political risk as letters get sent out to trading partners. Now, on that, our top story, trade uncertainty is the focus, the dominant theme for investors. Isabelle Mateos Lago, chief economist at BNP Paribas, writing, the outlook for U.S. tariffs is worse than we hitherto anticipated in our central scenario. While the extension until August 1st of the 10% universal baseline tariff window is in some ways welcome, the letters sent by the White House last week prolong uncertainty and suggest an increased likelihood of tariffs eventually setting closer to the Liberation Day level. I'm pleased to say that Isabelle joins us now. Isabelle, it is a market that maybe doesn't want to get fooled again, in the words of Peter Scheer, quoting the song, or maybe just thinks that Trump will back off. Is that a mistake to assume that the current levels being sent out now are going to be lessened down the road?
Good morning, Danny. Look, I think the market has initially reacted to the only hard news we have, which is that the window for talks has been extended until August 1, which is definitely positive. And I think the market has also learned that there's an element of Trump negotiation tactics, which is to hike the pressure when you come into the final stretch. So it seems that the fairly moderate or insignificant, frankly, market reaction we've seen so far is this assumption that, don't pay too much attention to the headline numbers. However, that may be complacent. And I think, our central scenario, and I think which was pretty consensus, was that we would settle around an average external tariff for the U.S. that would be around 15%, which is still very high. And it now looks perhaps more realistic that it will be higher than that. Quite simply because President Trump may have decided that markets can stomach this, and the U.S. economy needs the revenue. So I'm not sure markets have fully priced that in yet, and that will be important to see how much progress can be made in the next few weeks until August 1 to lower down these headline level tariffs.
So if it is a president, Isabelle, that's emboldened By a lack of market reaction, it goes further than that. It's also a lack of anything showing up in the economic data, which also has been supporting the markets. At what point does that change if we do settle around a tariff level that's above 15%, or even if we just get more uncertainty?
Well, uncertainty itself is a factor, and you're starting to see this from the reactions that from the corporate sector in the impacted areas, notably copper recently. Like, people are saying, just give us certainty, give us a number, and then we can adjust. And that unfortunately has been lacking. Now, you're right, the global economy and all its parts, frankly, have been very resilient in the face of all the shocks we've had so far. And I think one reason for this has been actually the resilience of global trade, because we've seen a lot of front-running of tariffs that led to surge in exports from everywhere in the world to the US. We're expecting some pullback, but actually so far the pullback has been fairly minimal. And as well, we've seen a lack of retaliation from the vast majorities of countries, and more trade deals being discussed or concluded between other countries. What that means is that global trade has remained incredibly resilient. And it's true, so far we haven't seen too much of an impact from the ramp up in US tariffs level. But I think it would be not just premature, but frankly wrong to assume that there's going to be no impact. We're just still waiting for the dust to settle, with, of course, the concern that President Trump himself may be drawing the lesson that the market is fine with all this and the global economy is going to be fine with all this. And I think that would be drawing the wrong conclusion.
Isabelle, what does that mean for your assumption tomorrow when we get CPI data? Will any of the creep of tariff-related inflation show up?
We should begin to see some of that tariff pressure show up. It hasn't so far, but there were a few reasons for this. The main one probably being the large inventory level, which could take, frankly, all the way until the end of August to clear out, judging from inventory to sales ratios currently. As well, the effective tariff actually collected until June remained quite a bit lower than the statutory rate. So June is really the first month where they're close to one another. And companies generally, while signaling in surveys that they fully intend to pass on additional costs from tariffs, have had reasons to be patient while waiting for clarity about the final level of the tariffs. So we do expect to see first signs of pass-through, and in line with your consensus, expect CPI around 0.3, both for core and headline, which would be a significant leg up. But we think the bulk of the impact is going to manifest itself in July and August.
It has been pretty remarkable, though, Isabelle. It's not just the headline data that's looked really strong. What we've heard from corporates as this earnings season starts in earnest this week, but we heard from Delta expecting more passengers. Amazon, for their Prime Day, had the biggest Prime Day that they've ever had. We're going to get the banks, JP Morgan, Wells, Citi, all reporting tomorrow. What are you looking from to corporate America to signal the state of not just consumers, but this overall economy as the trade headwinds start to hit?
Yeah, well, I mean, you have to remember the tariffs only apply to goods, and the U.S. is primarily a service-driven economy. So, Delta is not impacted by tariffs. The banks are not directly impacted by the tariffs. Large shares of the U.S. economy are not directly impacted by the tariffs. So we should expect, and the economy has been holding up remarkably well. So there's no reason to expect bad news all around. And then even the manufacturing sector, looking backwards, has been impacted by tariffs at 10%. And in some sectors which have been exempted so far, none at all. So the question is going to be not so much the backward-looking impact on earnings, but really the guidance. What are they signaling? And in those sectors that will be impacted by the tariffs, how much are they signaling it might impact their margins? But so far, all the signals are that the margins indeed have not been impacted, and the economy has been holding up well. So earnings should be pretty good.
All right, it's going to be a busy week between that and CPI, as you mentioned. Isabelle, thank you so much for joining on this Monday morning. Isabelle Mateos, Lago of BNP. Now let's get you some other top stories that are trending on the terminal this morning. Bitcoin has hit another record, topping $120,000 for the first time. Progress on crucial crypto legislation is adding fuel to that rally. The House will debate and possibly vote on legislation this week. President Trump and his allies have seized on a new way to criticize Fed Chair Powell, the renovation of the Fed headquarters. The construction project offers the clearest example yet of how the president and his team are looking for every opportunity to scrutinize Powell's leadership. Powell's term as chair ends in May of 2026. And President Trump also says the U.S. is sending more Patriot air defense batteries to Ukraine. He told reporters on Sunday that the EU will shoulder the cost. The remarks are likely to set the scene for what the president described would be his, quote, major statement on the war in Ukraine sometime today. Coming up, countries jostled to cut a deal with Trump. We're going to bring you the latest trade update up next on your Bloomberg Brief.
So the European Union is talking to us. They want to open up their country. I would say Japan to a much lesser extent in terms of opening up their country. South Korea wants to make a deal other than tariffs. Right now, as you know, they're paying a substantial tariff, but they want to make a difference. So some of these deals, maybe I'll change them and maybe I won't.
President Trump speaking on Sunday. Sources tell Bloomberg that the EU is also preparing to step up its engagement with countries hit by Trump's tariff regime. The bloc's trade chief told reporters earlier that he's still in talks with the U.S.
An idea of 30% tariff rate is effectively prohibitive to the mutual trade. And that is why we continue to engage with the United States administration and prioritize negotiated solutions by the new deadline of the August 1st.
Joining us now is Brendan Murray, who leads our global trade coverage. Brendan, this is becoming something of a trend. Announce above consensus tariffs either on the weekend or after the market close. It's enough to keep your head spinning. Where do we stand with these letters that the Trump administration has been pushing out?
Well, we saw the flurry of them come out starting last week, and we expect more to be released this week. For the European Union, though, this is really coming down to crunch time. They're gathering in Brussels today. There'll be a lot of back and forth about what they should do to respond to President Trump's latest threat of 30%. You heard the trade minister there talk about how that was prohibitive, essentially saying that will destroy trade between the U.S. and the European Union. So not something that they could live with. And so the negotiations will continue later today. They have talks with their U.S. counterparts. And so they will really have to decide how much of a pain threshold they're willing to take. The baseline is 10%. President Trump is now saying 30%. You know, could they meet somewhere in the middle? We will find out. But in the meantime, there's a lot of anxiety about how much of an economic headwind this could be for both economies. Really, this is the largest trade and investment relationship in the world, the transatlantic U.S.-EU relationship. So there's a lot at stake here. There were countries last week who received their tariff letters, but none that are as big as the economic relationship between Europe and the United States.
Well, Brendan, on that point, this headline coming out just about 20 minutes ago, an EU official saying that the EU's Ursula von der Leyen and from Canada, Mark Carney, will be meeting and will be speaking rather today. Brendan, what is the EU doing, and really all these nations, maybe to look beyond the U.S. and strengthen trade relationships elsewhere?
Well, up until this point, you basically had two options in dealing with the U.S. administration. You negotiate them, and you negotiate a deal that does not benefit you. Or you retaliate. And almost none of the countries that President Trump has targeted are retaliating. So they've been all of these discussions that have pretty much gone nowhere. We don't have barely any deals signed by the previous deadline or now the new August 1st deadline. And so what countries we're likely to see are they're going to start talking to each other about, can we coordinate a response here? We can't win the one-on-one fight with the U.S. economy. because we're so reliant on it. So maybe, and we'll have to figure out what the details are of this von der Leyen-Carney conversation, but perhaps we might begin to see countries start saying, you know what, if we do this together, we might have better success.
Will be interesting to see how that goes. Brendan, thank you so much for your coverage. That is Bloomberg's Brendan Murray. Now, in the meantime, China's export growth accelerated for the first time since March as factories rode out the tariff roller coaster. Exports in June were up 5.8%, while imports rose 1.1%, both figures beating estimates. Let's get more with Bloomberg China economy editor Alan Wong. Alan, what does the data tell us about how China has been dealing with the latest tariff headwinds from the U.S.?
China's data is telling us that China's export machine is humming along rather nicely despite all the tariffs and the trade war that is still continuing. Don't forget that despite the trade truce, we're still looking at tariffs as high as 45 or more on Chinese products entering the United States. And that's not counting certain tariffs that apply to different products and materials. And so the number is telling us that China has managed to find markets to sell its wares, even though exports to the U.S. in June fell more than 10%. And the previous month, when the 145% tariffs were in place, the fall in exports to the U.S. was even more severe. And being able to find new markets for Chinese exports is important, also because domestically China has an overcapacity issue. So if manufacturers could find new customers outside the U.S., then China's export machine is in safe hands. But there are lots of uncertainty with tariffs, which we have discussed extensively, including how the coming negotiation between China and the U.S. and a potential summit between President Xi and President Trump will pan out, because those will decide whether the two countries can have a lasting trade agreement that can ensure at whatever level of tariffs that trade can remain flowing between the two biggest economies.
Alan, another concentration of Trump's tariffs had been Southeast Asian nations, and we're still getting the details worked out there. Vietnam had been surprised by a 20% tariff placed on them. But if a lot of these exports, it seems, are going to Southeast Asian nations, what does that suggest about how various operators are getting around the China tariffs? Will we continue to see a fueling of goods there that still make its way to the U.S.?
Yeah, it's worth noting that in June, China's exports to Southeast Asian countries, the ASEAN countries, jumped more than it did the previous month, which meant that a lot of the goods that China is selling globally now goes to Southeast Asia. But we don't know if those products are meant to be consumed by those countries. In fact, there's a very good chance that those products or parts are assembled there and then shipped along to other countries, such as the United States. And what it's going to be very interesting to see with all the letters that Trump is sending to different countries, whether he can manage to convince other countries to curb Chinese transshipment, however that's defined, and to use higher tariff rates on those transshipment to deter such practice. And that will have a major effect on China's export and, by extension, its economic outlook.
Yeah, a lot of confusion as to exactly how that will take form. Alan, thank you so much. Bloomberg's Alan Wong. Now, a quick check on currencies this morning. And likewise, you aren't seeing much reaction across markets into what was announced over the weekend, a new 30% tariff rate with an August 1st deadline for both the EU and Mexico. Little change for your dollar, your euro, and your yuan. Coming up, former President Biden calls President Trump and other Republicans, quote, liars when it comes to some of his clemencies. We're going to have the details for you next and your front pages. This is Bloomberg. You're watching Bloomberg Brief with Danny Berger in New York. Let's get you some front page news. Here's what the major publications are running with this morning. Now, on the Wall Street Journal, the federal government retreating from student lending. President Trump's tax and spending law includes new restrictions on how much students can borrow and how they repay. The provision reverses the government's near takeover of the $1.7 trillion student lending market over the past 6 decades. Now, next up, the Financial Times has this on their front page, that investment banking is on course to extend a record streak of underperforming. Now, they looked at consensus data compiled by Bloomberg, where analysts forecast investment banking revenue to fall almost 10% to $7.5 billion. It continues to be the bank's traders holding up the results. Finally, on the New York Times, former President Joe Biden has been breaking his silence on his clemency decisions. In an interview with the Times, Biden said that he personally approved all of the pardons and communications. Now, that refutes Republican claims that he might not have been in control of the decisions. Biden said that he had directed his staff to use the auto pen because he, quote, had granted clemency to so many people. Now, elsewhere in D.C., it is so-called Crypto Week. Will we get more legislation that helps solidify the more mainstream use of crypto? The market seems to like that. Higher by 2.5% for Bitcoin. It goes record after record. We are above $122,000 this morning, leading some to say maybe crypto is a hedge as the rest of risk assets are weaker this morning. But can you trust that with it being dominated by news in D.C.? Also want to show you what JGBs are doing this morning. 20-year yields suffering, higher by 10 basis points, trading at the highest since 2000 as concerns over growing debt and potentially more spending from Japan, a story we've heard elsewhere in the world. Now, coming up, Sarah Bianchi of Evercore ISI will join us on the latest on trade and President Trump's criticism of Fed Chair Powell. All of that coming up next. Stay with your Bloomberg Brief. It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Monday. More letters. President Trump warns the EU and Mexico that they'll face a 30% tariff. The EU plans to step up trade deals with other nations. Laying the groundwork, a White House probe over Fed renovations fuels speculation that Trump may fire Chair Powell. And we get the view from corporate America. Wall Street braces for the weakest earnings season in 2 years. So you had about 30 hours to wait this weekend to see what the market reaction would be to another tariff letter bomb dropped over the weekend, this time EU and Mexico. Maybe in that context, this reaction is underwhelming, down about 1/3% for both the S&P and NASDAQ futures. But that comes off the back of record highs last week, not just for the S&P, but for European equities too. Bond markets, those continue to be under pressure. Last week, it was about better economic data and continued pressure on Fed Chair Jay Powell. It is the 10-year and the 30-year yield. It is duration that's coming under more pressure this morning, up a basis point and 2 basis points, respectively, but maybe that has to do with what's happening in Japan. You can see at the bottom of your screen fiscal concerns there. Are they going to be spending more? Higher by 10 basis points for the 20-year yield, for the highest since 2000. Those are your markets. Let's look at some of the individual stocks on the move pre-market. With that is Valerie Teitel. Good morning, Val.
Good morning, Danny. Let's start in the tech space. We're seeing Synopsys. Those shares rise just shy of 4%. That's after the China regulator has given them the green light for their acquisition of Ansys. Now, some are reading through this that it's the easing of those U.S. export restrictions on chips is actually leading to better coordination, better relations between the U.S. and China. So we're seeing Synopsys rise some 4% in pre-market trade. Let's move on to defense. We're also seeing some positive stocks in the green when it comes to defense. One of those is Boeing, up near 2%. They had an upgrade by the street, but there's also some speculation that this big Trump announcement later tonight could entail more defense spending, at least when it comes to Ukraine. Lastly, let's end in the consumer sector. We're seeing Kraft Heinz rise yet again this morning, up over 2%. This is after a Wall Street Journal report that the company is eyeing a breakup of some of its key businesses. Danny.
Valerie, thank you very much for those updates. Valerie Teitel. Now let's turn our focus back to our top story, tariffs and President Trump's latest ultimatums. He spoke to reporters on Sunday where talks with various nations stand.
So the European Union is talking to us. They want to open up their country. I would say Japan to a much lesser extent in terms of opening up their country. South Korea wants to make a deal other than tariffs. Right now, as you know, they're paying a substantial tariff, but they want to make a difference. So some of these deals, maybe I'll change them and maybe I won't.
With the latest, let's bring in Bloomberg's Tyler Kendall in Washington. Tyler, more letters over the weekend. Where do we even stand at this point?
Yeah. Hey, Danny. Good morning. More letters. Now we're up to about 24 letters that the administration has sent to trading partners. Many of them have to do with the so-called reciprocal tariffs, but now we can add Canada and Mexico to the list as well. Of course, those negotiations had been on a totally separate track, but they are still now being tariffed and faced with that August 1st deadline to make a deal. Importantly, we did hear from the EU's chief trade negotiator earlier this morning, who did say that he will speak with his U.S. counterparts, as this 30% tariff letter from over the weekend really does dampen what was seen as relative progress for the trading bloc, which had moved up in line essentially to strike a deal with the United States after what had been previous frustration by this White House. Now, if you ask the administration, they would say that 30% is lower than the 50% tariff that the EU was facing. But of course, it is still a very high barrier. And you had the German Chancellor Merz over the weekend, for example, saying that 30% would hurt the German economy, the largest economy in the EU, to its core. Now, people familiar do tell Bloomberg News that EU negotiators are focusing in on those sector-specific tariffs, particularly when it comes to autos. These are those tariffs, as you well know, Danny, that were enacted under Section 232 on the basis of national security concerns. They weren't originally intended to be part of these negotiations, but they have made their way into the conversation in a really meaningful way for multiple trading partners beyond the EU. You also had President Trump mention there Japan. We know that autos for Japan is also a major sticking point.
Tyler, also over the weekend, the other development was more pressure, it would seem, on Fed Chair Powell. The NEC director, Kevin Hassett, spoke to ABC over the weekend on this point and whether the White House would explore firing Jay Powell. Here's what he had to say.
Yes or no answer. Does the president, in your view, have the authority to fire the Fed chair?
That's a thing that's being looked into, but certainly if there's cause.
Tyler, they're looking at it. What kind of pressure is the Fed chair under right now?
Right. I mean, an enormous pressure, Danny, and the administration really does appear to be coalescing around a different sort of argument here when it comes to applying that pressure. You've heard President Trump elevate this accusation that really started with his head of the Federal Housing Finance Agency, Bill Pulte, who is accusing Powell without evidence that he misled members of Congress when it came to his testimony about some recent renovations at the Federal Reserve. Now, we should say that Powell has maintained that those renovations were not extravagant, but you still have President Trump saying that if true, that could lead to his firing. And other administration officials, including the OMB director Russ Vought, as well as NEC Director Kevin Hassett there, have also started adding to this criticism. Now, Bloomberg News did pull some of the Fed budget documents, which does show that cost estimates for the project did rise to $2.5 billion this year, compared with $1.9 billion that was originally projected in 2023. But the Fed has said that they have been in compliance and that they will comply with the information that the administration is seeking moving forward here. Danny, it really is just the latest argument that we're hearing beyond that they want the Fed to cut rates. Another one I'll put on your radar, of course, is that the administration has really also coalesced around this idea that higher interest rates are hurting the costs that the U.S. government has to pay when it comes to servicing its debt.
Tyler, thank you very much for that. That is Bloomberg's Tyler Kendall. Now, Sarah Bianchi, Evercore ISI, Senior Managing Director and Chief Strategist of International Political Affairs and Public Policy, does see that trade risk growing. She writes, quote, "Our top line view remains that markets should not dismiss Trump's latest statements and that the next actual moves on tariffs are likely to be up." I'm pleased to say that Sarah joins us now. She also served as a deputy U.S. trade representative from 2021 to 24. Sarah, great to see you this morning. So as we sort through the letters and threats, how do you view as to what actually sticks and what gets lessened?
Well, certainly a lot of this is not going to stick. I think the administration is frustrated with the pace of the deals. As you all have mentioned, I think the sectoral tariffs, autos, other things are proving to be a real sticking point for a lot of these countries. And these deals aren't getting across the finish line. I think for those of us who've done trade negotiations and know how difficult they can be, this doesn't come as a huge surprise. But even we're hearing some of the deals that have been inked, like Vietnam, may not really have true alignment. So I think there's frustration. But our point is, even if some of these ones come off, if the EU, Canada, all these ones get resolved, still we're seeing a higher a direction. The Vietnam tariff coming in at 20, the copper tariffs from last week, we assume others. And so we're already at 15% weighted average. And again, we think the next arrow points up.
But what even serves as a circuit breaker, Sarah, at this point to lessen some of those tariff levels? If it's a market that continues to reach new high, and it is various nations who don't seem to be trying to enforce any types of retaliation.
I think there is a challenge. You know, we wrote back earlier this year about how what was the Trump put? What was the point where the market reaction was too much for this White House? Obviously not the only thing driving them, but certainly relevant. Now I'm almost wondering if there's a Trump call, if he's going to keep escalating because the markets are not responding really. And I guess they don't believe he's going to put all these into place. Now, nor do we. But again, these are really elevated tariff rates, nothing our country has seen. And so that's really the challenge. I assume the administration will try to get some resolution in the next few weeks on with some of these countries. But again, there's really challenging political sticking points. They're not as easy as you think.
Well, on that point, Sarah, we even heard literally hours after Trump announced the letter going to the EU that there was, according to sources speaking to various outlets, that EU officials viewed this as just a negotiating tactic, the 30% from August 1st. If everyone, including markets, including trading partners, thinks that Trump is bluffing, just how many concessions are they willing to give this administration?
It's a real challenge, you know, it is a real challenge. I do think these countries are negotiating in good faith. There's no question it is better to get all of this resolved if you can. But at the same time, when it comes to sticky things, again, like Japan and autos, they're not going to give just because of this bluster. They have real political considerations at home, and they can't just move on all of this. And right now we're seeing the administration being particularly tough on these sectoral negotiations. And I think that is what is gumming up some of these deals.
In an overall view, Sarah, what Trump campaigned on was something that looked like 10% tariffs for everybody and then something higher for adversaries like China. Instead, we've seen some of the various trading partners have similar levels of tariffs to China, where it seems that more negotiations are happening with the Chinese. How much of a shift does this represent? And to what end? What do you see as the purpose of playing hardball with these countries, with blocs like the EU?
You're right. This is far more than he did talk about in the campaign. This administration has been very, very aggressive coming out of the gate. I think they came out, the problem for them is they came out too aggressive and then they pivoted back. And now everyone is confused and it's a little bit hard to say where the bottom line is. I think most people who look at this think that perhaps a fight like this with the EU is a distraction from some of the real concerns about China. But this president solves for a lot on trade. He worries about the trade deficit. He worries about fairness. So he's willing to play ball, and especially when he's not seen at this point the impact from the economy and the impact on the markets. Remember, this is a president who's coming off some pretty big wins on foreign policy and legislation. So he thinks he's got some room here to gamble a bit.
Does that mean, Sarah, that the logical conclusion of this is just tariffs lessened once you start to actually see economic impact? You start to see the white of the eyes of what eventually may happen from higher tariff levels?
It's interesting. Right now, we aren't seeing some of the impacts in the economy, and even some of the impacts in terms of tariff revenue is not matching the rate. So there's definitely some stuff going on with the data that people are watching. But I think it's premature to conclude that going from a 2.5% tariff rate weighted average to 15 or higher is not going to have some economic impact. I do think the administration would like to ink some of these deals before some of that data comes through. But they're having trouble. Even the ones that were supposed to be easier have become much more complicated.
To that point, Sarah, again, you as someone who's been very experienced with working on various trade deals, August 1st, a new deadline for a lot of these countries. What is your expectations on whether more deals can be inked or whether we see more can kicking as we head into the next month?
Oh, I think we're going to see both. Look, they've got to get somebody over the finish line here, or this is, becoming a little bit, we're just kind of playing the same game. So I assume in the month of July, they will get somebody over the finish line. Again, these are really still pretty high level, even the deals we're talking about. Even the UK deal, it's not really what we call a trade deal. It's a framework. But I do think they're going to have to do more can kicking. Again, you look at some of these countries. Japan has a really important election coming up. They can't really move before that. South Korea, very well intentioned, but a very, very new government there. So, and India, even though that one was supposed to be going better, again, you can get stuck on, really technical ag issues. Trade is very granular, very technical, and there's sticking points between these countries that have persisted for years because there's real political and economic forces behind them.
Sarah, this was so fantastic. Thank you so much for getting up early and joining us. Please come join again soon. That's Sarah Bianchi of Evercore ISI. Coming up, earnings season kicks off this week. We're going to preview the big banks and the others reporting tomorrow. And your week ahead, that's coming up next. Your Bloomberg Brief. Tesla CEO Elon Musk has suggested in a new post on X that the EV maker's shareholders will be polled on whether to invest in xAI. This is after reporting that SpaceX might make an investment in xAI. Bloomberg Tech Europe anchor Tom McKenzie joins us now. Tom, what is this all about?
Yeah, Danny, as you say, Elon Musk getting onto X, the platform, and saying, and responding to a post saying, look, we could put this to shareholders, to a poll for shareholders at Tesla as to whether or not they want to invest in xAI, which, of course, is the company behind the chatbot Grok. He said that he's made it pretty clear as well in the past he would like that to happen, but he says it's not up to him, it's up to the board, it's up to shareholders, and that they are looking to put that poll to them. So we'll see if indeed that comes through and what it would mean. As you say, on the back of reporting from Wall Street Journal that SpaceX, another, of course, of Elon Musk's companies, could be looking to put $2 billion into xAI. We know that xAI is raising and looking to raise money at a pretty rapid clip as they put out new models and new chatbots with a valuation potentially, according to Bloomberg reporting, of around $200 billion. But it's a reminder of just how interconnected these parts of the businesses overseen by Elon Musk are now gradually becoming.
It wasn't that long ago, Tom, that it was Musk who was threatening to leave just for his AI startup if there weren't various pay packages enact. Just how closely is xAI connected to the other companies? How important is it for shareholders that there is some sort of integration, that this isn't a Musk who, already distracted, is whisked away by xAI?
Yeah, and I'm thinking of the note that Dan Ives of Wedbush put out last week, of course, saying that the board and the team, the shareholders, key shareholders at Tesla, should put in place a new incentive package to make sure that Musk is focused on the business and autonomy and robo-taxis and xAI and less focused on politics and setting up that new US political party, of course. In terms of how enmeshed these companies are already, we'll see if SpaceX invests in xAI. You had xAI, of course, that was set up, then merged with X, the social media platform. That has happened. That's now a holding company. You have xAI is a customer of Tesla, so buying their utility storage companies, that's a linkage there. And you do have investors and analysts saying that it would be a good idea if Tesla did get closer, did invest in xAI, particularly along the autonomous push. You have the likes of Gene Munster, for example, saying if Tesla truly wants to be autonomous, then this really makes sense in terms of getting closer ties, closer financial links between xAI and Tesla. Musk has already said that xAI will be used and the Grok chatbot will be used in Tesla vehicles going forward. And you're right. Many investors, given the plummeting sales of Tesla, particularly here in Europe, countries like Germany and France, they want to see that connectivity between xAI with the AI capabilities then embedded in future Tesla cars.
Tom, thank you so much for that. That is Bloomberg Tech Europe anchor Tom McKenzie. Elsewhere, U.S. equities have swung back up from April lows to fresh highs. Now the market optimism faces a new test. Corporate America will be releasing second quarter earnings. It unofficially kicks off with Wall Street banks reporting tomorrow. For more, Bloomberg senior strategist for equities, Neil Campling, joins us now. Neil, it is a market that's continued to go higher, but you have had some of the big bank CEOs like Jamie Dimon warn of complacency. What's the view from corporate America, from the banking sector, likely to be this week?
I think the main thing for the banking sector this week will be a combination of fairly solid earnings, given that you have net interest income should be positive for the big banks, and also the trading volumes as well, given the volatility that we've had in the equity markets during the quarter, offsetting some of that. Obviously, the investment banking revenues for many expected to be lower. Such a Bank of America CEO came out recently and cautioned on that, given some of the uncertainty in the markets. I think one of the most important things, Danny, is going to be key to hear from the CEOs in terms of their outlook, what they're hearing from clients, and just the general trend in terms of what the backdrop is for the economy going forward. So there'll be a barometer, I think, of test in terms of the message from the companies will be as important as the earnings itself.
Even though there are so many unknowns, Neil, just how much of a tailwind are some of these corporates going to get by the fact you have seen the dollar weaken in reaction to the policy coming out of Washington, D.C.?
Yeah, absolutely. I think the dollar weakness, which has been in focus this year, should certainly provide a decent tailwind for many of the international and big corporations of America, which is something that's a reverse that we've seen in recent years. So certainly that should be a benefit. As we get into earnings, clearly there'll be some impact from tariffs that we didn't have in Q1 earnings season. However, we're still in that kind of wait and see approach for many of the corporations to know exactly what the impacts will be from a variety of the tariffs that are still uncertain at this stage. So I do wonder whether we'll get a continuation of what we had after Q1, which was basically that companies were effectively sort of deferring on what the impacts will be, because there is that uncertainty. But against that, you also have some pretty low expectations for actual profit growth for this quarter. I think from the Bloomberg intelligence data, less than 3% of earnings growth is expected for Q2, the lowest number since Q2 of 2023.
A low bar. We'll see if they can beat it. Neil, thank you very much for joining us. Bloomberg's Neil Campling. Coming up, we're going to set you up for your big week ahead, including those earnings and a whole lot of data. You're watching Bloomberg Brief. You're watching Bloomberg Brief. I'm Danny Berger in New York. Let's get you set up for your trading week. Crypto week kicks off in Washington, D.C. today. That has fueled a new record high in the price of Bitcoin, trading over $122,000. President Trump is also set to deliver a major statement on Russia today as the U.S. boosts its support for Ukraine. And then it is a big week with the big bank earnings. Those begin on Tuesday. JP Morgan, Citi, and Wells will all report tomorrow. We're also going to get a fresh read tomorrow on inflation. That comes with US CPI data and more earnings throughout the week. Okay, some individual movers to focus on. We are looking at Tesla shares. Those are under a microscope. Elon Musk suggesting that a shareholder vote on investing in XAI is in the works. Those shares up 1%, 2% for Kraft Heinz. A report from the Journal on plans for a breakup. Finally, Synopsys, those shares rising 3.7%. It has won approval from China for its $35 billion takeover of Ansys. All right, that's it for your Bloomberg Brief surveillance. We'll take the reins from here. This is Bloomberg.